Well. Happy Friday, everyone. We are back again for another incredible episode of Just Shilling. And of course, we have another amazing guest in Alex today, and she is joining us from hopefully sunny San Diego. And before we do get into it, folks, just wanted to go over some quick ground rules here. First and foremost, nothing that we discuss today is going to ever be considered financial advice. Second, the opinion that we share are of our own and do not necessarily represent our respective organizations. And last but not least, if it's anything that's probably too spicy or controversial for a family dinner during the holidays, we'll avoid that. But we are a room full of adults here. So without further ado, I'd like to welcome Alex. Just give us a 30-second minute elevator pitch about who you are and your current role, and then we'll get into how you got to this place in the first place.
Sounds great. Thanks, Trevor, and hello, everyone. So my name's Alex Botte. Like you said, I'm based in San Diego, California, is where I was born and raised. Today, I work remotely at a crypto VC firm, a venture capital firm called Hack VC. And my role at Hack is investor relations. So I work with the fund investors, make sure that they understand what we're doing, our strategy, our investments, and then I also do a bunch of research. So I do some of our investment memos, our investment theses, like help form those and write some stuff for like our blog and things like that. So it's a nice kind of mix of different things.
Yeah, and I was actually just looking at a couple of pieces that you wrote. You got some great work there, very educational. So for the folks that are in the audience that are viewing today, and we'll check this out later on, definitely show some love. And at the end of this, we'll make sure that you're able to direct people in the right way so that they can stay abreast of all the awesome stuff that you're working on. But kind of before we go back into how you first got into the industry and ended up here in the first place, let's just kind of talk a little bit about what is Hack VC. Many folks out there, this may be their first opportunity to ever even hear about a crypto VC, and then specifically even have someone that's from a crypto VC. So tell us a little bit about what Hack VC is, how it got started in the first place.
Yeah, so Hack, it's we're like a crypto native institutional VC. We're located here in the US. So I'm remotely, but we do have an office in New York and then one in California. And VC means we invest like pretty early stage in different crypto companies and protocols. So think like we'll incubate some companies, we'll do seed, we'll do pre-seed, we'll even go to Series A. And we were founded in 2021, so we've been around for like 4 years now. Manage a
Nice.
couple of funds, and it was started by this guy Alex Pack. So he's been a crypto VC for basically his entire career, over a decade at this point. So before he started Hack in 2021, he started another crypto VC that's now like the largest in Asia. It's called Dragonfly. So he started that, and then before Dragonfly, he started the Web3 practice at Bain Capital. They're like a very
Wow.
large private equity firm. And I think they were like one of the first private equity firms to start investing in like tokens and decentralized protocols. So he led that effort. And so he's been doing this for a while, like since 2014, I want to say. And yeah, so he's like the face of the firm. He's the founder. And then we built a team around him. We built a team and a platform. So we have about 15 people now. We have people supporting him on the investment side, and then people like me on like the more operational investor side.
Yes. Thank you. That's a wonderful recap to bring everyone up to speed here. And now let's talk a little bit about you. So, what first got you curious about crypto, blockchain, especially coming from, a quant finance background? And was there a specific moment that made you say, like, "Hey, this is actually going to change everything"?
Yeah, so I started doing some research on crypto in 2021. During the time of that last bull market, and you know how people say like, "Oh, I got into crypto because my friend told me to like buy Bitcoin or buy Ethereum," and so I bought some, and I didn't really know what it was, and then I did some research. That was not my experience at all. It was actually at work. Like you said, my background is in quant investment management, so I worked at two pretty large quant hedge funds called AQR and Two Sigma. And Two Sigma, like as a quant hedge fund, you kind of sit at this intersection between finance and tech.
Mm,
Um, and so a lot of our investors at Two Sigma were asking us like, what are you doing in crypto? Because the market's taking off and it's post pandemic, or it's during the pandemic and
people getting
there's a frenzy
FOMO.
in crypto markets. Yeah, exactly. So they asked me, I was doing thematic research, so they were like, Alex, do like a crypto theme piece. And so what I did is I looked at Bitcoin's relationship to a bunch of different asset classes, like equities and fixed income, currencies, commodities, and then classic hedge fund strategies too. And we wrote this paper. It did super well. A lot of people were asking about it. And so I was like, I should understand what this is. Like, what is Bitcoin? What is Ethereum? What is Uniswap? Dogecoin? Like these were the big assets that I was looking at the time.
Mm,
And so I did research on the personal side, and it was just so fascinating. Like I was like, this is I guess it's a lot of different disciplines built together. Like there's some, I know you said we shouldn't talk about like, things that you want to talk about at family dinner, but like there's some politics in it, right? There's
yeah,
some finance, there's some like cultural things.
yeah.
It just there's like game theory and economics. Like so, I just loved how multidisciplined it was. And then I got approached by someone who read that paper, and they were like, "I'm leaving this big TradFi firm. Like it's a massive bond manager, hundreds of billions of dollars under management." She's like, "I'm leaving that firm to start my own liquid token fund." And I was like, all right, I think I should take the jump. She had some really good backers. So it was like not too much of a risk. Like in my opinion, it wasn't like too risky.
Yeah.
But I was like, let me just do this full time. Like this is just super, very, very exciting and cutting edge. So and then that brought me to hack.
Wonderful. And when you move from quantitative funds to liquid tokens, now venture capital, like what would you say, Alex, has been your biggest mind shift in these roles?
So I guess like every point in like okay, let me just take a step back. When I said I was leaving the liquid token fund to go to hack, one of my family members is like, "What is your career? Like what do you want to do
Mm,
when you like fully grow up? Like what are you targeting to be the CIO or the CEO of like a pension or a certain in like or a certain institution?" And I was like, I don't know. Like I honestly don't know what I want to do. All I know is that in every role that I step into, I want to be learning something new. So
yeah,
like when I went from quant investment management to crypto, it was learning crypto and liquid tokens, and then now I'm learning VC. So it's just like I just want to make sure it stay challenged and like learn a completely different kind of topic. I would say there are so many similarities though, like between quant investment management and just crypto in general. So when I started in quant, that was in 2013. And at the time, they were taking these liquid hedge fund strategies and putting them into mutual funds. So like a long short equity strategy or like a commodity trading strategy and putting it into like a mutual fund 1940 Act vehicle. And a lot of people at the time had a lot of questions because they were like, aren't these strategies super dangerous? Like you're shorting, you're using leverage, you're using derivatives. These are like
and for
very
those people that may
risky.
not know, or may not, understand the investment aspect, like what does that mean, like shorting and longing and things, just kind of a very basic level?
Yeah. So if you are like a long short equity hedge fund, what you're doing is you're looking at different stocks and you're saying, I like these ones and I don't like these ones. For the ones you like, you just go out and buy them. That's like you going long Apple. For the ones that you don't like, say you don't like Nvidia or something, then how do you express that? If you don't, you would sell it, but you don't own it. So what you do is you go to a bank, they let you borrow Nvidia, you borrow it, you sell it in the market, and you sell it for $100, for example. And then because you hate that stock, if you're right, it's going to fall. And so say it falls to $50, you buy Nvidia back at $50 and you return the stock to the bank and you just made $50 on that trade. So but that's really dangerous though, right? Because what if you borrowed Nvidia, you sold it or you sold it for $100, and then Nvidia could go to $1,000, it could go to 2,000. There's no limit on the upside. If it starts just absolutely, pumping, you would then have to buy it back at that higher price, and you might not have the money for it. So shorting, that's called shorting. It is pretty like it's risky, right? It's riskier than
Yeah,
just buying stock because if you buy a stock at $100, the lowest it could go is zero. It can't go negative. So, anyways, it was taking those types of shorting strategies. We could talk about like what leverage or derivatives are, but it's similar type of like risky strategies if you don't have a good risk management.
hmm,
Um, and putting that into like regulated US mutual funds. And so people were like, they needed a lot of education. They were like, these are
yeah,
not good strategies. And if they're handled right, they're great strategies. You can get great returns from them. I think it's so similar with crypto. You see institutions being like, this stuff is all scammy. There's not actual tech being built. There's no real use cases for it. And some of that's true, but there's a lot that's not true about that.
Yeah,
So there's education about why do we need this? What are the real use cases? Like, how do you invest in this stuff? So those are the parallels between, I would say, like what I did before and in crypto to like in my job today.
fantastic. And looking back at some of those kind of earlier days, when you got into crypto and started to get into research, like, was there one thing that you wish you had known then that you know now with all of your experience?
Oh man, that is such a good question. Oh well, I think I knew this, but I don't know if I fully appreciate it. Okay, so I signed to go to the Liquid Token Fund. I signed Thanksgiving of 21. And so then I waited for my bonus and then I joined the Liquid Token Fund January of 2022. So I'm like, oh, this is great. We're still in a bull market. Like this is fun. And then what happened in like May of 22? We had we had Terra Luna, then we had, BlockFi and Three Arrows and June. So and then later on that year it was FTX. So I knew it was going to be volatile because I had looked at Bitcoin's price and it's like an extremely volatile asset. It's like 4 or 5x that of like a stock. It moves
Yeah,
around so
yeah.
much. And then if you go further out on the risk spectrum, altcoins are just way more volatile. So I knew it was going to be a wild ride. I guess I didn't appreciate that on top of that volatility, then you're going to have like, bad risk management, fraud, like that's hard. Like it's hard to manage and you have to like ride through that and stay committed and find like the good that's happening in the industry and like the real stuff that's being built and focus on that.
And talk to me a little bit about, just your team in general, right? Like, I know it's a very strong group. What was it like, just working on this team compared to some of the other industries that you worked on? I mean, was it something that was completely foreign to you? Was it something that was like really refreshing to you? And I mean, you came in at a very crazy time in the industry, right? You were kind of thrown in trial by fire. So, what was it like, and what were your teammates even thinking about? And how did you all kind of handle and ride the waves?
Yeah, I think crypto, what I found in crypto is that the people that are in it or have been in it for a while, like much longer than me, it's more than just a job to them. Like and we talked about this, Trevor, I think like when we first spoke a couple of
Yeah,
weeks ago, like there's this there's this entanglement, for lack of a better word with your personal life. And like your friends are also people that you might have met at a crypto conference, or they might be investors in your funds, or they might be projects you invested in. And a lot of people like they really like what they do.
yeah.
And it's more than a job. So I like that. I really like that aspect of it. So I do feel like people are very it's refreshing. The energy is like very high. I'm also saying this when Bitcoin reached an all-time high yesterday. So we're back in like that type of
The ride
yeah,
for sure.
yeah,
When we chatted too, you had mentioned about being very rigorous, about research and kind of portfolio construction. So how does that kind of rigor apply in this kind of fast and noisy market like crypto compared to
yep.
maybe some of the other things that you've done?
So I feel like in crypto, because we talked about how like there's so many disciplines built within this one asset
Yeah.
class. I feel like it's very tempting to try to do everything.
Yes.
And so us at Hack VC, we're like very focused. We're focused on Web3 infrastructure, and even within that, like we have themes. Like we're I would say thesis driven. So we're looking at like what are the high level things that we believe in, and then once you have those themes, and I can provide examples because I realize this is like maybe too theoretical or something, but we have these themes, and then within each of those themes, it's like, okay, let's find the best protocols and the best companies within those themes. And then once we find these, let's help them succeed. Let's help them find developers. Let's help them find users. Let's help them build the best code. Yeah, and help them go to market. So, like the themes that we are very focused on, like the intersection of crypto and AI, like obviously two really great technologies. There's a lot that AI can offer crypto, and crypto can offer AI. And there's a lot of infrastructure that needs to be built to marry those two things. So kind of laying out what that infrastructure stack looks like, and then investing in at each of those layers. And then another theme is like the stablecoin based transactional economy. Like
Mhm.
stable coins are really like the first true product market fit of crypto, and a lot of crypto tends to be very speculative and insular, but stable coins have the opportunity to break out of that. And so in order for stable coins to make it into like the real world outside of crypto, there's a lot of infrastructure that still needs to be built, so like investing in those layers. And then finally, just like next gen cryptography, like quantum resistant computing, or privacy. Like, how do you incorporate privacy in tech and in blockchains? So, like, I would say it's like just general infrastructure and tech that has to be built within Web3. So we start with these theses. We try. It's sometimes it's kind of hard to describe the theses because they don't have names yet. So, but that's good because that means it's pre-narrative. And so finding those areas and then investing in them, and helping our investments win the categories.
Yeah, this is a fantastic transition into more about AI and privacy. And I'm actually going to reference a wonderful blog that you wrote. I believe this was back in March of this year, and it was about why privacy matters, right? So I'll just kind of read this quote for you. We're entering a data gold rush with exponential growth in both data volume and sensitivity. Yet the centralization of trust stands in the way of fully unlocking value from that data. So can you elaborate a little bit more on like that?
Yeah, I think blockchains by design, right, are very open. Like they're open, they're public ledgers where you can see transactions and data that occur. But not everything should live on a on a blockchain. Like for enterprises and like true institutional adoption, there's going to be data like financial records or health records, social security, stuff like that that like should definitely not be public. And so there needs to be a way, and there have been like attempts at this in the past, like Tornado Cash and mixers, where you take transactions, you mix them together, and then you post it to the blockchain. But now there's like, I guess, some new private technology that you can combine with blockchains to make transactions and data more private. And that's going to be necessary for us to be able to like fully use blockchain, to replace the financial system.
Yeah.
Um,
And in terms of AI as well too, this was further about what you were talking about. Essentially, it's like thinking about personalized AI, and for it to truly be personalized, it has to have access to almost everything you've done, on chain, off chain. So to really make it unique, right? So when it comes to large organizations, especially institutions, that are trying to have their employees or their employees want to use GPTs and things like that. Talk to us a little bit about data privacy, and I'll read another quote from your article. Data privacy isn't just about dodging Big Brother or corporate snooping. It's the key to letting innovation flourish in a safe and secure way.
yeah. Okay. So I think if say you have this centralized company, like I don't want to pick on Meta, but maybe it's like a company like Meta, and they're offering you like a personal AI assistant. But like you said, Trevor, like they need to know all of your preferences. So they need to see all of your data, all of your meetings, all your calendars, all your friends, all your contacts, and in order to make that personal assistant really be helpful for you. I think there is maybe some sensitivity, right, about giving all of your data over to a for-profit company, because they're going to use that data, right, to and monetize it,
Yeah.
and use it in other ways. So if there's a way to maintain that data, give it to maybe like more of an open source application, but have some privacy barrier in between. So like that's where I was saying there's some technology, like one of them is ZK proofs, to be able to use
And
that
what does
crypto.
that and what does that mean for the folks that may never have heard that before?
Yeah, okay. It's called zero knowledge proofs, and basically what it is it's a way to prove that something happened. So the way that I've heard, this is not my original thing, but I've heard it explained to me is like, do you play Wordle by any chance?
Yeah, yeah,
Okay.
yeah.
Um, so say you want to prove to someone that you solved the Wordle today. Um, you could show that, but you don't want to give away the word because I still want to play it. You know how like you have those like blocks and it'll be like, gray, 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 yellow, gray, gray, gray,
Yes,
green,
yeah.
green, and then green, 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 green. So on the fourth try, I solved the Wordle and I'm showing you I solved it. You can see it. But I still don't know what the Wordle is.
Okay,
That would
that's
be like
cool.
a ZK proof. So it's like I have this data. I want to prove to you that I have the data, but it's using cryptographic technology to show you the result without showing you like the inputs and the computation. Um, and so there's that technology that can be used to like keep your data private, give access to like an open source protocol, and then say that protocol that's developing an application for your personal AI, it uses it, but then you're not happy with it. You can still take your data away and move it to someone else that's building a different protocol that might be better suited for your needs. So I think it's like owning your data, not giving it to big corporations, and using like private blockchain technology to help you like keep the data that you want to keep private.
Yeah, that's fantastic. Beautiful. I love that example. I think the first example that I heard about with ZK was like, you're going to a club and you have the bouncer and you don't want to have to show them your actual physical ID, but there was technology that could actually verify that everything that was on your ID was cool. So it's basically a simple yes or no. Are you 21? Yes. Are you not? No. You don't need to see their address. You don't need to see their weight, their height, all that kind of personal information, right? So that's really cool. I love that example. So, when it comes to you're talking about like the risk aspect of this industry, and how do you and your team, Alex, balance kind of supporting high risk, high reward projects while still maintaining a really kind of, I would say, solid investment thesis?
Yep, totally. So one I think is diversification, like diversifying across different themes and theses. But we don't want to diversify too much because like we really believe in those things. But here's one example within a thesis. So within that like modularization thesis, like restaking. So like the modularization of blockchain is taking a blockchain's components and breaking them down into individual pieces, making sure the performance of those pieces is like maximized and optimized, and then bringing it back together for like a much better system overall. So one of the pieces that a blockchain does, like you can think of as like yeah, economic security, and you can take um, restaking is taking a crypto asset like ETH, and using ETH to secure other networks. And so the big example of this, or like the big protocol of restaking was Eigenlayer for ETH, and we thought restaking was kind of like the next evolution of like basically economic security within blockchains. You had proof
Mhm.
of work with Bitcoin, proof of stake with Ethereum and other chains, and then now like this concept of restaking where you could just get economic security from other chains. And so like Eigenlayer might not be like the only winner. Like there might be some execution risk. The team could mess up. They could get out. They could get competed, against by another protocol. So we basically were like, okay, let's apply this same thesis, but instead of on Ethereum, let's try Solana or let's try Bitcoin. So you diversify some of like the execution risk, but the theme is still the same, if that makes sense. So I think one is like diversification and like managing risk in terms of like team and execution. And then the other is like sizing positions accordingly. There definitely are some there's some investments that we make that are like probably more risky than others. It's a brand new idea. It has
Yeah.
no category, like newer team, whatever. You size it smaller, so that its risk weight in the portfolio is equivalent with everything else. So yeah, those are kind of two different ways to think about it.
And I guess in a simple way, it's just not putting all your eggs in one basket. If you're really not sure if the basket can carry all the eggs in the first place. Really, really interesting. In terms of Hack VC, I know that you guys do have a really kind of strong tech-driven approach. And one of the other blogs that you had wrote as well too, I believe this was a little bit more recent. I forget what date it was actually, but in terms of why. your firm invest in a particular organization early. And this was something that I believe that you co-wrote as well too. But Hack VC and its partners have been underwriting the modular thesis since before layer twos were called layer twos. We've backed rollups, scaling solutions, shared sequencers, data availability layers, and restaking protocols across ecosystems. And I believe that was an investment in a Solana project that you mentioned as well too. So, how does this kind of methodical, mindful type of thinking and due diligence really kind of influence the work that you do with investors?
I think some of our investors they're investing with us, of course, for like economic returns. They want us to pick the best protocols that are going to do well and launch tokens that are very successful. But another part of it is like they just want to learn, and so uh, yeah, I mean these concepts like blockchains are confusing. Modularizing blockchains then becomes more confusing, and then the actual technical like workings of a protocol that we invest in are super confusing and highly technical. So we try to break it down and like just be like, what are the use cases of these investments? And I think our investors want to like learn about why this technology is being built, who's it being built for, and why do they need it. So while someone might not care like how is this Solana restaking protocol validating other services? It's more like, why do things need to be validated? Why does there need to be economic security? So answering like those higher level questions of why, like that's I think where we come in is like on the education front. Because that's what I think some of our investors want, want exposure with hack is just to learn.
Yeah. And this is a great segue to, what makes Hack VC unique?
Yeah, it's a good. This is something we think about a lot because we like to win and we want to win every deal that we want exposure
Yeah.
to. Because like as VCs, like we've talked a lot about one of our clients, which is the investors in our funds, but then we also have like the clients are the portfolio companies we invest in, and when they're raising, if it's a really hot round, like they can choose between Hack and there are many other crypto VCs out there. So we think about it a lot. Why would a founder want to choose us? I think one is the fact that Alex has been in the industry for a long time and has a really successful track record. He sees the future first, so he invests in things before they have names, and his track record shows that. I think the second thing though is we are experts in like building developer ecosystems. So
Yes.
we have something called Hack Summit, which is a group of around 130,000 Web3 developers.
Wow,
And
that's
so,
amazing.
yeah, like our portcos, and we'll host conferences, around it. One of them we're doing a conference. Our next summit is around KBW, Korean Blockchain Week, in a couple of months. But we'll put our portfolio companies up on stage and we'll showcase them there. They also get access to talent, to users through that network. And then we formed other developer communities too. Like another one is Zuzalu. One of our venture partners founded it with Vitalik Buterin, who started Ethereum. And it's like a network state initiative. And so like we're really good at like bringing these developers together. And then I think the third is we have a research division called Hack Labs. It's like R&D, like research and development within Hack, and we use a lot of the protocols that we invest in ourselves, which is super important for staying on the front lines and like actually understanding how this works. And over time, it's morphed into like an incubation like venture studio as well because we use these protocols, then we have ideas and we know people in the industry who are like, oh, that person they just stopped working at that other place. They'd be great for this. Like, let's combine his technical
Yes.
expertise with her like business development acumen or vice versa and bring these teams together and incubate it here within Hack Labs. So I think just like those three things, just experience developer native communities and being like on chain, like active on chain. I think that type of stuff matters. And it's something that we built like over time, over like the 4+ years that Hack has been in existence. And now we're leading over 90% of our deals. So we tend to win, like our win rates are very high and
Yeah.
we're like lead, the lead investor. So it's definitely worked. And we continue to kind of improve upon that platform.
Yeah, it sounds like, your team and our team are alike. You have to really truly eat, breathe, sleep this to to have that competitive advantage and to win. And that's definitely something that's made us very successful as well too. So the next question for me is, with so many different projects out there, right? How do you, Alex, distinguish between, kind of what's fueled purely in hype versus, something with really a strong, lasting traction that can be possibly stand the test of time? I know you don't have a crystal ball, but still.
I think the best projects out there have both. Like they have fundamentals, they have a great team, a good vision, they're in a huge market, and they also have a narrative behind them. Like that's kind of the ideal. But I guess how we look at it is what's really nice about crypto is a lot of the track records of the founders are like open and available. So you can look at GitHub, you can look at things that they've built in the past. And some of the partners at HackVC came from protocols themselves. They built oracles, they built bridges, so they know like what to look for and the quality of the code. So we spend a lot of time on that. We spend a lot of time with the team. We spend a lot of time on like the market opportunity. Like it could be a really good team with really good code and a great product, but like the markets maybe like the TAM is pretty small. So like it's not that interesting. And then I think finally, like for
And can you
us,
explain to maybe folks they don't they might not know what that acronym meant? Can you explain that?
oh, the total addressable market, like how many people are actually like if it's a business to developer protocol, like how many developers might actually use this product? Like what is the market that these people are going after? And then the final thing is like we do care about revenue generation. Like we want there to be a path to like a sustainable business and generating revenue, whether that's through the token or an equity or both. So yeah, I would say that's how we kind of like we spend a lot of time in like the diligence phase. But yeah, ideally there's fundamentals and then there's a narrative or there will be a narrative behind them too, because that always helps.
Yeah, and the people matter too. I know that you do a lot of research into the team and the actual individuals that build that team. We were talking about community a little bit earlier, Alex, and community building is obviously huge in crypto, right? So, how do you see community impacting these startup and different investors, and how involved are you and the rest of your team with interacting with the community? Because I mean, I feel like just being a part of a community, it's a gold mine in itself in terms of being able to find out a lot of information that may not be, quite evident or readily available to others.
For sure. And I think, yeah, I mean, if you look at like even the Bitcoin community, it's almost like tribal in some ways. Like people just like they're Bitcoiners and it's like this religious belief. Um, and then like some other communities like the Solana community, the Ethereum community, they've built strong followings. And so I do think in crypto it's really important. So we find that a lot of our portfolio companies, they want to see like they of course want to have the tech there before they launch, a mainnet or even like a dev net or test net before. But they also definitely want to see some community, whether it's an active Discord or an active X, kind of keep following. We'll help them with that. We have someone who's like a head of platform. She was like the head of growth at Solana and Stellar beforehand. So she's actually been in their shoes, so she can give them some of her
Nice.
advice. I don't know all of her tips and tricks, but one of the things too is hackathons. Bringing like developers together, having them build on the infrastructure that a blockchain or a protocol is building. Yeah, so like I think there are different ways, but I think having that expertise in house and like we've been in your shoes, we've done this before. Here's our playbook. That's helpful. That we found that's been helpful.
And bring adding a little bit more into this too. Are there any particular sectors or regions within crypto, blockchain, Web3 that you think really kind of deserves more attention for the potential growth potential? And are there any areas just across the industry in whole that Hack VC has really been focusing on lately?
Yeah. Well, two kind of big trends. One is like the crypto M&A market. So that's picked up a lot
Yeah,
recently.
it
Like
has.
it's up like 29% year over year. And so as a crypto VC, like when we make an investment in something, we'll usually buy like equity, like private equity of a company, and then we'll also have token warrants. So it'll be a right to have ownership of a token if they end up launching one. And so as a VC, it's usually like liquidity happens via tokens in crypto. Like projects will launch a token within 2 to 3 years of building um, But now that the crypto M&A market is picking up, equity, is also another exit option too.
Mm.
So we saw like there's been three pretty big uh, deals that have been announced, like $1 billion plus in the past 6 months or so. One was a stablecoin company called Bridge that was acquired by Stripe. And then you had Deribit, which is an options exchange that was purchased by Coinbase, and then Hidden Road, which is a prime broker that was purchased by Ripple. So we're expecting to see that market continue to heat up, which is exciting. The second trend is like this is so boring, but it is exciting. Is like all the developments happening in stablecoins. Speaking of the M&A market, you also have the IPO market. Like Circle IPO'd, massively oversubscribed. Like shares have gone up multiple X post listing. And if you look at who bought the IPO, a lot of it was like traditional finance firms. A lot of the crypto native firms were cut back. And so there's all this pent up demand for like stablecoin exposure. And I think it's like it's easy for some of these like TradFi players to buy equity as opposed to going on chain and buying Bitcoin, or even the Bitcoin ETFs. Sometimes it's just easier to buy stocks than ETFs. So there's a lot of pent up demand there. And then, of course, you have the stablecoin regulation, like the Genius Act that was approved by the Senate, and that was like in this day and age, like it was like pretty bipartisan, which is cool to see.
Yeah.
um, but to have the U.S. Put more like give more regulatory clarity on stablecoins is just going to open the door for like more traditional financial institutions to adopt stablecoins. And then the final trend that I'll share with you on stablecoins that is super exciting is stablecoin. Like the use case of stablecoins historically was peer to peer, like sending peer to peer payments on like Tron or Ethereum or whatever. Now it's changed, and B2B payments are now the highest use case of stablecoin. So like I don't know, that's pretty cool to see, kind of like breaking out of that insular crypto wheel and going more into the mainstream. So I think that's there's so many exciting developments in stablecoins.
Oh, it's amazing. It's amazing. Such a incredible time to be alive. And you know, speaking about the institutions, how has this influx of, I would say, institutional money, how is it affecting, I would say, do you think the crypto market in general and the investment opportunities from not only from what you guys are doing, but from others outside?
That is a good question. Yeah, I think one of the big things that we heard from institutions, like when we were raising for our funds, was they just wanted more regulatory clarity in the U.S. Like the administration before this one now, like it was anti-crypto, like right, like Gary Gensler at the SEC was going after like decentralized exchanges, centralizing like Coinbase, Binance, suing all of them, and even like Uniswap and stuff. So there was a lot of hesitation to even build in the U.S., let alone invest. I think that is starting to unwind a little bit. I think it's still really hard to. You need to hire the talent internally if you want to build on chain. There's still a lot of expertise required there, so it's easier to
Yeah.
do stuff off chain. So ETFs, these treasury companies, which we didn't even get into, but there's a lot of that is like speculation and access arbitrage, and some regulatory arbitrage too. Um, so yeah, I think as the UX gets better, I think as access points going on and off chain become easier, um, there's just going to be more and more institutions coming into crypto.
Yeah, it was a crazy time, a few years ago, especially with the lawsuits. I mean, it felt like Oprah. It's like you get a lawsuit, you get a lawsuit, you get a lawsuit. Everyone gets a lawsuit. It was crazy times, and I think that we're definitely turning the corner. But we are coming along here. I mean, I could chat with you quite frankly for a long time, but I will be cognizant of the time here, and I wanted to wrap this up. But one other thing that I was really kind of curious to ask you is, after being in crypto for some time here, I mean, a year in crypto feels like dog years, right? So, is there anything that really still excites you about the space, or is there anything that really truly surprising, even to this day, that you just aren't even expecting?
Oh man, that's a good question. I think that there's still like so much to learn. Like you you drink from the fire hose. Like you start with the Bitcoin white paper and then you just kind of like consume, and that consumption doesn't stop.
Yeah.
There's always like some new technology or some new way it's going to like integrate with existing technologies or existing systems. And so um, yeah, I would say that I'm pleasantly surprised by the fact that there's still just like so much to learn and the industry just keeps evolving. So um, yeah.
I second that. It's fascinating. As soon as you think you know something, you realize that you don't know nearly as much as you possibly could, which is exciting. It keeps it very fresh for sure. And let's just spend this last few minutes here to talk a little bit more about Hack VC. So I know it's a very unique team. I've been following you all. You guys are doing some great work. Tell me a little bit more about the culture, right? Like what makes it special? What is it about your team that really kind of continues to keep you lit up and really excited about going to work every day?
Yeah, I think what's special about the hack team, it's like very, I'm sure a lot of people say, but like it's very flat, you know? There's not like all of these different layers within the organization. So you find that people do a mix of like high level strategy and then like the low level analyst execution tasks, And roles are blurred. I talked about my role. I lead investor relations, but I also do some research. And I also like, talk to our portcos. And so there's like this concept of like if we're not moving forward, you just pick up an oar and you keep and you paddle along with everyone else. So if things are getting dropped, like feel free to step in and just do it yourself. No one's going to like stop you or get upset that you're stepping on their toes or in their territory. So I think that's pretty cool. I also think it's a place where everyone works really hard. Like I think some of the people on our team just don't sleep, and I think that can get toxic, a little bit. If you don't like truly love it, but I think some of the people on our team they just love what they do, and like I said, it's blended into their personal lives, and uh, yeah, it's just like nonstop. Even on the weekends, they're like meeting with people, and it's part social, it's part work. And so, yeah, that's been kind of you don't see that as much, in the traditional kind of finance world, but it occurs in crypto.
Yeah, this I one of the things me and our founder what we say because we host a weekly AMA for job seekers they're trying to get into space. Like we always tell them like this isn't an industry where you could just like it. You have to love it. You almost have to be obsessed with it. And it's just nonstop, and there's just so much out there. But I think that's something that's really beautiful about it, and what sets it aside still to this day. And I've been in the space, several years like you. So, last question for you before we talk a little bit about how we can follow you and keep up to what your organization is doing, and you personally as well too, Alex. But what advice would you give someone that is possibly looking to break into crypto venture capital or investor relationships, but they're just not sure how to start? What are some wise words of wisdom?
I would say read as much as you can, follow the firms that you're interested in on X, follow the deals that they do, and see if that's like if that's those are like the sectors and the industries that you're most passionate about. I would also you know, this is how I feel like I network with people is I'll have one call with someone and then I'll go through their list of people that they know. And if they know someone at a crypto VC or one of the portcos that a crypto VC is invested in, I would just like be direct and ask for those intros and just talk to as many people as you can and see if it's like something that you would be interested in. Like if it's the work that you would want to do in the sectors that you want to be in and the like part of the industry that you find to be the most exciting. So I guess I would just talk to people as much as you can and like and network and ask directly for introductions.
Network, network, network. Well, thank you. This has been incredible. I'll wrap it up here. Really learned a lot here. I really appreciate you taking the time on your Friday. And everyone that's listening here today, you could be doing anything in the world, but you chose to hang out with us on a Friday in the summertime. After, if you work in the industry, it's never not a crazy week, but another very interesting week. And there's a lot going on here, and the markets are doing some incredible stuff. So exciting times. How can people follow you, Alex? What's the best way that people can touch base with you or find out more about Hack VC? And we do have some people in the audience that may be potential job seekers or people that are looking to maybe volunteer or just contribute. How can they do that?
Yeah, I would go to hack.vc. You can subscribe to our updates there, and let us know. Like, are you a job seeker? Are you a founder? Um, are you an LP? Like, let us know, and we'll send you updates. And would also just like love to hear from you there. So, yeah, hack.vc, and then there's also like our X account on there, and then all of our personal X accounts too under the team page.
Fantastic. Well, wrapping up here, thank you so much again. I appreciate you. And for everyone that got a chance to check this out live, I hope that you enjoyed this incredible conversation. For those that weren't able to join, we will be getting some clips up on the socials. We'll get this up pretty soon here on LinkedIn, and then we'll get the full episode uploaded on YouTube, and then we'll get some clips on X to continue to keep the education going. As Alex said, you never stop with the education. It's always about learning here. So thank you again. Take care, everyone. Have a great day. Bye.
Thanks, Trevor. Bye.